What's up, mortgage coach community? Dave Savage here interviewing Andy Zemon. What's up, Andy?
How are you, Dave? It's good to be here. Thanks so much for having me. I'm doing like everybody else, man. We're in the middle of we're doing the Corona shuffle everywhere we go, and we're having, trying to have as much fun with it as we can.
Yeah, no, I think we're so blessed as mortgage professionals that we have jobs and we are super busy helping bring fiscal stimulus to family with refis.
Yeah,
So
yeah. There's no doubt about it. I was just telling somebody a couple minutes before this call. She asked how we were doing, and I said, I'm blessed. I have a job. I'm helping people. Can't ask for much more. It's a
no,
good time.
we really can't. Well, let's get into how you're helping people in this call. While we are, right in the middle, this is middle of April 2020. I do want to always talk about like, hey, what are you doing that's different right now? But I also want to go where the puck's going so that this interview is just as relevant in middle of April as it is in 2021. Because I also think there will be a new normal. The way people leverage tech, the way people communicate, it's accelerated the digital transition that's taking place in our space.
Yeah, for sure. For sure.
So for anybody who doesn't know you, tell us a little bit about your mortgage practice, your market, and what kind of production you're doing.
Yeah, so I've been in the business about 19 years. Actually, it is 19 years now. I work at Waterstone Mortgage Corporation, so owned by Waterstone Bank. So I feel very, I do feel blessed in this environment. Secure bank and backing, it's been good for us, which has been nice. And then as far as the mortgage business goes, I run a team. We run a nice little tight team. It's just me and two people plus some processors. So I have two loan partners, what we call them, and then there's a couple of processors that support the branch, including my business as well. Did 50 million last year. Currently target track is 65 million. We're producing a little over that right now, which is great. We didn't obviously expect a refinance boom, so it's been nice to have a little extra icing on the cake there.
Right.
But we stay, we're 70 right now. I just did the number before today's call. So we're sitting at 77% purchase business year to date, which is good. And, our sweet spot, Dave, so I'm in a small market. I'm in Central Virginia, Charlottesville, Virginia. A couple 100,000 people here in our greater metropolitan area, which is really not very much. Looking out the windows, I got mountains and very few people around me. A couple deer and some black bear. I share the area with here. And so it's not a big market for us. And so for us, it's been, the unique thing is how do we stay in this market of digital age? How do we stay relevant with a small population? And I'm lucky with the bank. I can lend in 43 states and I do that. And, I leverage my digital, right? I leverage my Facebook and stuff. So that's kind of my business, and it's always been purchase heavy. So that's what we do.
So, and how many loans are you on track? What do you think you'll close for April of this month?
So April, I'm on the books with 32. So if I close 28, I'm going to consider that to be a win.
Yeah, I think so. Congratulations. That would be a win. And what's your average loan amount in your market?
So our average loan amount as of last year, I didn't run the number yet for this year, but as of last year, we were sitting just below 280,000 for an average loan amount. So it's a good loan amount. Yeah, good loan amount. I mean, we're not in California loan amounts, but I'll take it.
No, it's not the coastal loan amounts, but it's a great loan amount.
Yeah,
and that's incredible success. So let's talk about your sales process. What's different right now, if anything, because you have been so heavily digital.
Yeah.
That I know the tools that you're using are somewhat the same, but is there anything different about how you're executing your borrower experience today versus a month or two ago?
Well, so I think that one of the first things to say is, over a month or two ago, yes, in that the leads that come in, they're a lot more valuable today because, there's a lot of them, right? But they're really valuable. We need them because we don't know what tomorrow holds. I think if anything has come true or if any saying is true, over the last 60 to 90 days, we've realized that tomorrow everything could change. I mean, my gosh, how many times has a guideline changed in the last 4 weeks? How many times have rates spiked and dropped in the last 4 weeks?
No, like 2 weeks.
Yeah, 2 weeks, right? Yeah, there we go. Maybe it just feels like 4 months. How about that? So I think we've got to take every single opportunity for what it is, which is an opportunity that may not be there tomorrow. And so my belief is that, and I think I've proven this, I'm the best closer on our team. I'm the best converter of leads on our team. And so for a long time, I believed, and I was taught even, that there's a philosophy that says, allow your staff to convert these leads, get them set up, bring them in for the appointment, face to face, or let's call it video, whatever it might be. I think that's garbage right now. And I think that's garbage going into the future. I think people immediately want, and maybe this is, I don't know if it's my ego talking or not, but I think they want to talk to me. I think they need to talk to me. I think they should talk to me. And I think they deserve to talk to me. And so for those of you that are watching this video, if you're great at your craft, right? Like I'm following in the footsteps of the Jeremy Forciers and all the great people that you've had speak here. They're great at what they do. And if we're going to compete with them, or you're going to compete with me, or I'm going to compete with you, I got to get to that client faster, because that's how we do it. So every piece of technology that we've integrated here recently has been designed around how do we get more Andy time with the clients without it actually taking more Andy time, or not a whole lot of Andy time. And that's really been kind of the piece that I've been working on. And it's fair to say I've been working on it for a couple of years now, thinking that was what we needed to do. And I'm very fortunate that I find myself here kind of prepared for it. But that's really what we're doing. And that's sort of how we're creating that buyer experience. We're giving them meat earlier in the process. In fact, right away, wherever possible.
Well, let's do this. You and I did an interview with you recently, doing a training, how to be efficient yourself with refis, and how to do that in a way that was even more valuable and more efficient for the family. So I've got a couple things to go through. Let's kind of do it conversationally. And then again, for everyone who's watching this, I have just been interviewing loan officer after loan officer. What's your process today? And how is it different? And where do you think it's going to be? To just create this playbook that these are best practices. And one more thing I'll say before we get into Andy's is every loan officer is a unique human being in a unique market with a unique skill set. And there are nuances. There are things, I interviewed a super successful top producer, $50 million a year, also supporting a team that does almost does over $500 million a year, the Gaylord Hanson team yesterday. And, he's using their app, like he's sending their app in a very thoughtful way with a super smart email that we showed you. And then he's sending the total cost analysis, and he's not using Zoom. And by the way, they weren't using Calendly. I was surprised that the Gaylord Hanson team was not using Calendly, but he is using Mortgage Coach Live. And the way he's delivering that live experience, it's money. And then the way that he was using their CRM to work with the team, I labeled the interview using leadership and teamwork, or teamwork and leadership, to create a competitive advantage. That's what these guys are doing. They're turning transparency into a competitive advantage powered by teamwork and technology. So Andy, let's go through your experience.
Okay.
So by the way, before this, Corona times, how many of your families came into your office and had an office experience like this?
If I said it was 80, I'd probably be lying. So I'll go low and I'll say I had 75% meeting rates, and then I was already using video. So virtually all of the people I was meeting, I was either meeting live in person or I was doing video with. And I was really pushing more towards the video and finding more reception to it before this. So, 70-75% of the people would still come in, and then the rest of the time was mostly video.
Got it. So audience, this is Jay Crowell, 170 million last year in Seattle, just a monster of success. And he had over 70% of his clients coming into his office, and they're not now, obviously. So that's gone. This was Kelly Zitlow's in-office experience. And Andy, when you do start bringing families through your office experience again, which will happen, please get me a picture. So I've got one. Like
I will.
Whatever your office experience looks like. And by the way, would it be similar to this? That at the beginning, there's no tech, and you're just doing, hey, what are your hopes, dreams, and goals? And then at some point, you're going to pull out Mortgage Coach, and you're going to walk them through it. Is that similar to what you were doing?
Yeah. So I have a TV in my office that I project to, and I'll tell you what, I believe the technology I think you can overdo technology, and I think that you can make people uncomfortable at the same time with it. So my presentation is actually a combination of the two. I do some things that I maintain that are still old school, pen and paper. I let the client take notes in the format that I'm giving them the information. It reinforces what they're doing. So they use a sheet of paper and they fill out. Give you the quick story is this. So when I was learning the business in 19 years ago, I needed a way to remember the things I was supposed to ask people about. So I created an acronym, and this will prove to you I'm not very smart. My acronym was MICE, M-I-C-E. Stands for mortgage and rental history, income, credit, and equity. And I have a sheet, a legal size sheet of paper that I hand people that have some very specific questions. And as I take them through the MICE sheet, they answer questions, which is the same stuff we do in a mortgage application. It's just in a format that logically people understand. They have an acronym that anchors them to the information. They wrote it down. They did their own version of the qualification. Then they see it in paper in our technology up on my screen, etc. Then I can start walking them through what these numbers really mean to them, because now they understand how we got there. So I use a combination of the technology, but I still go back a little old school. And even now when I do my Zoom calls with the clients, I do the MICE form, but I do it in the whiteboard format. And they watch me make my little notes. They don't get to do it, but they see it happen, so it makes a little more sense for them.
Do you happen to have one handy that you could just pull up and?
I literally don't. But let me explain. I'll email it to you. You give it, but it's just MIC.
Email it or take a picture of it. I would love.
I'll do that.
And anybody listening to this, I will put a link to that. Just like when I did the interview yesterday, he didn't have his CRM to show me, and so he sent me a screenshot. I put it in show notes below. So guys, you know, the Rocket was the first one that started delivering that digital app. Like, hey, let's give the family a link to fill out the app. And so here's the one thing that's good. By the way, everybody does that. Big banks do that. Every banker does that. Brokers do that. Everybody does that. You need to go beyond that. So I have a screenshot of Andy's app, and there's a couple different steps to the process. One, and I've seen this more and more and more, especially in this, you know, digital connection time when we have this isolation going on, is they're putting a video on it. And I'm going to play Andy's video, and then I'm going to have Andy kind of like debrief what's going on there. So I would assume, Andy, this is like, hey, you talk to the client, and now you're just putting a video on it to, well, guys, let's listen to it, and then we'll break it down. Break it down.
Hey, Jeff, it's Andy Zemon at Waterstone Mortgage. Pleasure talking to you there a couple minutes ago. So included in this text here is going to be the link to the total cost analysis that we just reviewed.
I like that.
Again, the design of that is, you know, we know that your wife couldn't be on the call with us, so it's a perfect opportunity for you to review everything with her. I gave you a little, not too long-winded overlay, just basically a walkthrough of the report. So you guys both know what's happening. Also, follow-up with this is going to give you access. There's a text message that I'll send you right after this, where you're going to have access to a scheduling website. So at any point in time, if you want to talk to me, it's just schedulewithandy.com. You can go in and pick any time on my calendar, and that way we don't have to do the whole phone tag thing. Now, that doesn't mean that you can't call me. This is my personal cell, so please feel free to call me, text me. It's important that you know that I'm available to you personally. So reach out with any questions that you have at any point in time, and we'll get them answered. Second text message that you're going to get from us is going to be a link to my mortgage app. And app by app, I mean, of course, the app, not the application. Within that app, you can actually complete the client data that we have, the intake forms. And that'll get us started on your overall pre-qualification and get you up and running. It's also got some nifty calculators and all the fun stuff along with it. And of course, you will get to see my big cheesy head smiling at you from your phone. I'm talking to you today. Thank you for the opportunity to be your lender. We appreciate it. Take it very seriously, and we'll look forward to getting you and your wife into your new home. Have an awesome day.
So just to be clear, guys, he's putting a link to the TCA, and you notice there's a video on it that he referenced. So video, details. So Andy, now this particular case, you were given the TCA before the app link. Is that standard, or is that, you know, atypical to what you do?
No. So I would say that what's typical for me is to listen to what the client wants while we're on that call, and then work to provide it. So if a client, if they really truly just simply want some basic information, then we go through our basic info form. If the client's really looking for numbers, I don't want to give them information without really driving the point home. So I'm actually building a TCA with them while I'm on the telephone so that I can have something handy. And usually I'm simply saying, look, this is a reference point. This is designed to be a big picture. More importantly, I'm showing you the way I'm going to communicate with you. So sometimes I do that, right? Where I give them a basic TCA to say, you need to know why I'm different. And frankly, if you're interviewing me along with other people, you need to know how I'm going to present data to you in a world today where you can't come see me. How am I going to give you information you can easily understand and that we can work through live? Well, you can't come see me anymore, so I better have some technology we can use, and I've been using this for a long time. It's either that or I can do, and then my approach, Dave, is simple. I always unsell the competition because my next statement is, or I could send you a really long-winded two-dimensional email that you can read and you can probably confuse what I'm really saying because there's no tone, there's no context, and you don't have any three-dimensional merit to it. The report I'm giving you is designed to be a three-dimensional report of your financial decisions. Great. And now they're like, okay, great. Everybody else sent me this long-winded email that I don't really understand, nor do I want to read anyway, because I get enough emails. And Andy already said it's two-dimensional, and I don't want two-dimensional. I want three. And until somebody can give me four, I'll be satisfied with three.
So that's some new scripting. I don't think I've ever heard the two-dimensional versus three-dimensional. But I think at the end of the day, what I hear you saying is that your value prop is I'm going to give you clarity, make it easy for you to consume content, and I'm going to give you transparency. And we're going to get more into that in just a minute. I want to kind of finish breaking down your experience that you're delivering, and then we'll get into this in more detail. So again, got to give that video on the front end. I think more times than not, when I'm interviewing top producers, they're sitting the app first. And so that conversation, like if you listen to the interview I did with Josh Metal, I'll put a link down below in show notes. You'll hear that he's just doing the video with that. And then you don't have to put a video. You can just put an email or a text. But I'm hearing more and more that the app, Josh calls it the questionnaire, the client questionnaire. It's a text. I'm hearing that more often than now. And then I heard you mention, I know you use Calendly. So what percentage of your meetings are booked through Calendly?
95%. Huge.
And you think your clients see it as a value and a service?
Yeah, I know they do. I mean, I get nothing but rave comments about it. And I believe, so Dave, the reason I use it, so philosophically, again, I believe my job is to present the client with an experience that they feel they get to control while they're working within parameters I've already established. So that's a lot of information, and maybe a lot of people are watching this saying, I don't know what he's saying. Well, imagine this. If I gave you the impression that I was doing business with you in a unique way that was really designed just for you, and I gave you all of the decision-making authority, but I was predefining the outcome. I was pre-negotiating the outcome of that relationship before it even started, then we both get to win. And so Calendly gives me the ability to do that in two parts. One, I'm not always available, right? If you look at my calendar for the day, it's like bum, 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 like a lot of you. Well, I have staff that also schedules me appointments. And you know what? They really want to please me. So my staff also has a tendency to overbook me. And then I don't get to do my job properly. And then if I don't get to take my notes and I don't get to give them notes, the clients have a bad experience. So my staff uses Calendly to schedule me for all meeting types: disclosure meetings, new client meetings, refinance call meetings. There's a different metric for each one of those. And then I took it one step further and I said, well, why not give all my clients the ability on my voicemail and on my email and on my text message to know that if they don't want to leave me a message, they can go to schedulewithandy.com and pick any time on my calendar. Because Dave, my job, when I'm in the office, my job is to be available. So from 7:30 in the morning until 6 p.m. at night, and some weekends, I have time on my calendar for my clients. New leads, current clients, realtors, because the last thing I want to do during the day, Dave, is take a bunch of messages handwritten from my phone and see that I have 50,000 messages waiting for me. I'd rather give you the freedom to say, all right, cool, I don't want to leave this guy a message. I'm just going to go to his calendar and pick a time. And then I call everybody when I'm supposed to call. It's that simple.
Love it. Well, I am definitely seeing Calendly and other competitors schedule once. Seems like there's a half dozen different companies I hear of, throughout the, the mortgage coach community. And I would love to know, guys, if you are using automated scheduling software, let me know what you're using in links down below if you love it. And if you find it, that it's saving you time. But I just think that is really becoming a mortgage coach community best practice to deliver the ultimate mortgage experience.
Hey, Jeff, it's Andy Zemon at Waterstone Mortgage.
The Calendly. And then Zoom. How often are you using Zoom nowadays in today's market?
Oh, daily. I mean, so daily, every client meeting that I can and that I do, every first meeting, certainly every impactful, real first meeting is done via Zoom call. And and I joke, people are like, oh my gosh, I got to do video. And I'm like, no, you don't have to do video, but you got to see, you got to see my ugly mug. And I want them to know who I am. I want them to know I love Mickey Mouse, right? I want them to ask me questions about things that are me. Like, I really do love Mickey Mouse, but the reason Mickey Mouse is on my wall is because I want people to ask me about him. It gives me a chance to talk about something other than mortgages. And I think you have to have that type of interesting thing somewhere in the background that you can reference that makes it not about loans. It gives you an opening. So yeah, so as far as the meetings go, man, all day, every day is Zoom, Zoom, Zoom. And I don't make the clients do that, but I do the screen share. And then I'll tell you what, Dave, I did find the mice form here. So when we do a screen share later, I can show it to you. So. Oh, you're muted, Dave. You pulled an Andy.
I did, didn't I, man?
You pulled an Andy.
So yeah, I'm not going to show the last one on my screen, but you're also using video. And what percentage of clients are you putting a video on the total cost analysis?
I mean, it's going to be upwards of 80 or 90%. The only time I don't is basically almost everyone.
And then I know you use, is it BombBomb that you use?
Yeah, I use BombBomb and email and video, and I use video.
When are you using that?
So I use BombBomb a ton, like in my email. So part of it is leverage. And what I know about myself is this: I am a much better orator. I guess I'm a much better speaker than I am a typer. I'm the world's worst typer. It takes me forever to type out an email. I don't like doing it. My vocabulary is poor and my grammar stinks. So I do video, and I send video and email. And then when I like today, I probably have 3 leads that were scheduled today that self-scheduled, and 2 of the 3 didn't answer. As soon as I hang up the telephone and I leave them a goofy voicemail to get them to call me back, I shoot them out. I pick up my cell phone and I send them a BombBomb video. And I'm like, hey, I just wanted you to know I'm a real guy. Yep, here I am. And I'm not in some call center somewhere, just here to answer your questions, because it humanizes us. And it's harder to say no to this face. It's not really, I'm lucky I got my wife to say yes, but it is harder to say no to this face than it is just the voice in your voicemail. It's easy to disregard that voicemail. It's hard to disregard the video that I send you. And when it's a 30-second quick follow-up, like, don't worry, I don't answer weird calls either. This is my personal cell phone. Just give me a buzz back. You know what? Like probably 6 out of 10 times I get a quick text message back that says, yeah, sorry, I was with the kids. I'll call you later. Great.
Love it, my brother. Well, you're killing it, man. You're doing all the right things. So I want to shift. So like that is the tech side of delivering this, call it a more amazing mortgage experience. Let's transition to the strategy side.
Okay.
And I'm going to show a screenshot, and I'm going to hand it off to you in just a minute, Andy. But these are the 4 essentials to making a smart mortgage decision. And I do think this number 1, cash reserves, will never be talked about the same. Most loan officers talk about cash reserves. They do it from the standpoint of, do you have enough to qualify for the loan?
Right.
Now going forward, it will be like, do you have enough for emergencies and opportunities?
Yeah.
We're in one of both of those right now. Make sure number two essential is analyzing the cost over time with options. Number 3 is whether you're doing a purchase or a refi, analyzing all of the debt, car loans, credit cards, student loans, whatever debt they have. And number 4, always show strategies to reduce the debt cost. So Andy, with that said, do you cover those? I know you cover all 4 of those because I've interviewed you before and I've heard what you do. Do you cover those before you do the TCA, or do you cover those while you're doing the TCA, or is it like a hybrid?
Mostly it's sort of in the process, right? Because if I cover too much at one time, we lose people. And so I cover it as it comes up based on the buyer and their specific needs. So my theory is this: if I don't get a client in the first meeting or 2 to say, I never thought of that before, or I never thought of it that way, or that never occurred to me, I don't feel like I've done my job. And I tell them that in the very beginning. Like, look, I'm supposed to be doing this, and I'm going to expose you to some things that should create some aha moments for you that you should be able to tell me you're not either comfortable with or you don't want to ever talk about again. And if I'm not doing that, I'm not expanding the box. So Dave, all 4 of those things come up. They just come up at different times because it's based on their needs. And that's based on what I drag out of them in my first interview or 2. You're muted again.
Man, it's like JV time.
I'm rubbing off on you.
I know. I was teasing you when we were prepping that you were like.
But you know what? Hey, before you tell me this, like, notice that, like, this is why I love video with clients, is because it's real, right? They laugh. Like, that's the other thing. If I don't figure out a time that they can joke and laugh at me on the video call, then I'm not engaging them. They might as well just call some provider. It's like, and if I see them talking to people outside in the room, I know I've lost their attention. Right?
No, just my son came in to do his stretches. And I took a picture of it because I'm like, these are the times that we are in, and I love every minute of it. So Andy, let's do this. Let's transition into one of your total cost analysis. Okay. Why don't you pull up your desktop and let's just walk through how you went through this. I mean, guys, think about it. The experience that you would typically have where a client would come into your office, so much of that, again, it will never be gone. I mean, when we get out of this isolation, we'll be meeting people in our offices again, but there is so much connection and value that can be created through Zoom, through Mortgage Coach, and through the other technologies that Andy's talking about. So tell us what we're looking at. And I really want to make sure people get that column 3, that strategy. I think that's so huge. So tell us what we're looking at.
All right. So I wanted to find a way to be impactful with refinance calls. A 2-minute backstory is about 10 years ago, I was doing some refinance work. I was analyzing refinancing for myself. And here's what I found. I figured out I was paralyzed by the analysis. And I did some of the reports myself and I looked at it and I'm like, man, I don't know, should I do this or not? And I thought, if I'm this paralyzed and I know what I'm doing, I think I know what I'm doing for a living, imagine how my clients must feel. And so what I realized is my approach to the whole thing was all wrong. Because if I was confused, my clients were definitely leaving confused. So I needed to come up with, think of it this way. There's no other industry that deals with goals that doesn't have some form of metric that you're trying to obtain. The difference is the mortgage industry's metrics are how quickly can I get you to closing, and really what do you want to know so I can just close you? And that felt wrong to me. So what I did was I created this test. So simply put, this is the refinance report that I do for everybody. And Dave, I'll take you through this in about 4 minutes. But the bottom line is I start out every single refinance opportunity with a statement of no, the client should not refinance. It does 2 things. It sets the table properly so that the client doesn't have to feel defensive like they're being sold. And it sets the table properly for the competitor because the competitor is then selling them. So I'm the guy that doesn't sell. They're the people that do sell. And let's face it, everybody in America wants to buy, but nobody wants to get sold anything. So I'm already a step ahead. So what we do now is we evaluate the 3 tests. And I call these, Dave, my golden rules of the refinance. Test number 1, and just script me for a minute, but are you going to be in this home for at least the next 2 years? Dave, are you going to be in this house for at least 2 more years or own it for 2 years?
Yep.
Cool. So the reason that's important isn't because it's going to take you that long to meet your break-even point,
But Dave, it's because nobody in their right mind goes through the mortgage process and deals with the crud that we put people through for a period of 6 months of savings. You're just not gonna do it. I wouldn't do it, so why would you? You're like, okay, cool. 2 years, Andy, what's test number 2? Well, Dave, test number 2 is really simple. We wanna figure out what your monthly payment savings is. Now, I don't use taxes and insurance included here because those are constants in your loan, but they change. So they're actually variables. So I did your loan a couple of years ago. Your tax and insurance are now higher. So we want to know what your principal and interest savings is compared to mortgage insurance. So we've got your current loan, and then we've got your conventional, in this particular case, refinance. So Dave, you'll notice here, you've got $132.82 in savings. Great. Savings is the byproduct of 2 of the 3 most important variables on your loan: rate and cost. Now, Dave, most of the mortgage industry knows you're focused on rate. They sell you on rate, but they forget about cost. So we pay attention to savings percentage because it's the byproduct of those 2. My rule is simple. You have to save at least 10% of your current principal and interest payment. So let's do a quick look. You pay $1,018.54 every month in principal and interest. I'm going to save you $132.82. That's 13% of your payment. 13 is greater than 10. Check. You're clear to move on to the next question. Because Dave, payment savings comes at the cost of the 3rd variable, which is time. Now, my job is not to put you in debt for the rest of your life. It's actually to do the opposite. I want you to call me 15 years from now and tell me you don't need my services. Thank you very much. So let's pay attention to time. You've got 27.33 years remaining. You see that under the freedom points. I'm going to reset your time clock to 30 years. Sorry, Dave, I'm about to put you in debt for a longer time period, but I'm going to teach you how to get out of it. So here's the thing. If you can comfortably keep paying today's payments, there's no reason you can't keep paying today's payment. So what if you dedicated that $132 a month back to the principal of the new loan? Dave, I want to see that I can get you mortgage free 3 years faster. That means the time I'm stealing from you, the 2.66 years, I not only have to give you that back, but I have to give that plus 3 years. That's not a mortgage industry term. It's not a mortgage industry rule, Dave. That's my rule for myself, which means it should be my rule for you. And in your case, we just squeak by, right? We're saving you 3.26 years in this, or 5 years in this case. So great, 3 years, what's it constitute? Savings. So what I did in this presentation is I made it about the holistic picture. There was never once a conversation about rate. There doesn't need to be a conversation about rate. It's about what their long-term benefit is, and I've covered all 3 of the variables, thus avoiding a lot more of the back and forth. Well, what about this? Well, what about that? I've set the standard for how we gauge refinances. I've set the metrics by which I think it's good to do them. And now if the client wants to see a change, we have metrics to test it. We test it. If it still works and they want to pay a point, go ahead. So this is how I think a TCA should be used, whether it's refinance or purchase. You can't really use it until you understand their goals. The whole point is to anchor them in their own beliefs and their own goals. That's what the TCA does so well. So that's how I set them up.
Love it. And guys, notice, like, if you could click on more information real quick and go to the reinvestment strategy. So notice there, guys, you know, when you're presenting refi options, if all you're doing is showing, hey, here's your refi and you're saving $132 a month, that's not enough. You need to show the total tangible benefit. And the total tangible benefit is, what if you reinvested that? How many years faster would you pay it off? And how much interest savings would you have? And so, you know, anything else you want to show on this before we just go into wrap-up mode?
Yeah, real quick. The number one question that I get is this. Well, why are you showing me this? What if I don't pay it off? Do I have to pay that off? And the answer is no. And my response, of course, right? My response is this. No, you definitely don't have to do that. But it's the only way that I can guarantee you the result, to show you the value. And I have to test it on this term. Like I for my own sake, I have to test it to show that it could constitute 3 years of savings, because otherwise it's a waste. What if I showed you $500 a month in savings, but you had 10 years left on your loan and I reset your time clock to 30 years? That's a mistake. We're only paying attention to payment savings. So that's the response I use in that question. And I tell them, look, you could probably go and put your money in the market, but you don't know what it's going to be worth tomorrow. Talk to your financial advisor. Could be worth less, could be worth more, could be worth the same. This is the only number that I can guarantee the result because it's a fixed amortization. So we test it, and you do what you want to with the money. If you want to go burn it in the burn pile in your backyard, do it, but maybe give me half before you do that.
Do you ever show the reinvestment strategy? So rather than show a prepay, investment?
I do, but I don't do that until I've shown them this, because they don't trust me, in my opinion. They don't trust me enough to do that yet until they see this number. I let them open that box by saying, yeah, you could also, you put your money someplace else, and they go, oh, I would like to see that. Wonder what that would do. And then in live format, I say, well, let's just add it. I duplicate it. They watch it happen. You know how your technology works. It's fantastic. And poof, there it is. They're like, oh my God, there's a fourth program. Where'd that come from? Like, there it is.
Let's close out this TCA. Let's go into your advice engine real quick, if you don't mind. Just go to the advice engine.
Oh, the advice engine?
Yeah.
Oh.
Log in our advice engine, yeah. Where you would create the TCA. I'm not gonna.
Oh, is that what you call that thing? I just call the website. All right.
Yeah, all right. Go to our website. Click on settings real quick.
Yep.
And guys, make note, the man is a grandmaster. You notice that he's done 1,718 TCAs. That is super legit, Andy. Congratulations. Just notice, everybody, you can get to that by clicking on settings. Now, Andy, real quick, go back to the homepage. You'll notice if you scroll down, scroll down a little bit on the right-hand side where the notifications are. Don't go into the notifications, just scroll down in that area.
Yeah.
Yeah, don't go into the notifications. Scroll down right there.
I'm trying to scroll. It's not scrolling for me.
Oh, click. Brian, I saw it a minute ago. Oh, go into one of the scenarios. That's what happened. You were in a scenario. Go into one of your scenarios. I just want to highlight something else that just came out. Notice that we now have the Optimal Blue mortgage market data. I want to make sure, guys, you know that that's a new resource available. And what that is Optimal Blue is the largest pricing platform in America. I think over 30% of every mortgage in America goes through that platform for pricing. And these are what rates were locked in at. So they're aggregating and creating an index at what rates were locked in at. Now, most consumers, all they have is what happens is what they see online. And those are what interest rates are advertised at. So they are looking at Zillow. They're looking at, rate, all the different solutions. The other really cool thing, click on the tab where it says loan to value, credit and loan to value. This is showing you what the pricing's at based off of different FICO scores. So I just want to make sure you guys are clear that this is a new feature. Actually, Jeremy Forcier sent me an email yesterday showing me that, he's using it with clients as just a thermometer of where rates are at. So how do you like the new gamification, Andy?
I love it. I think it's fun. I think anytime you can give somebody a target to hit, what I realized, when I first looked at it, I'm like, I don't have enough partner reports. What do you mean I'm not like at my highest milestone? And I need to do some more seller buy down reports. What am I doing? Like, I need to figure out how to give buyers a 1% interest rate. We need a seller buy down. So, I got to do some more of those reports, but it's cool, man. Anytime you can make a game out of it, it's fun. It's fun.
Yeah, no, hey, I think that's the way life is. Things can be collaborative, fun, and competition. Let's go. Count me in.
Yeah.
So stop sharing your screen, Andy, and let's just wrap it up. So Andy, you said you did over 50 million last year. You're going to do over 65 this year. How many families a year again is that?
Last year was close to 180, and this year, then I think the number needs to be right at 200, just shy of 200.
Yeah. So guys, this is a man and a team that is doing almost 300 loans a year. That's not just the top 1% in the country. I hope you took notes during this because he just unpacked his presentation. He unpacked the experience, the tools, the technology. You even got some great scripting for what he's doing and how he's doing it. And so, Andy, I really appreciate just how transparent you've been. One last question. I have been, talking to loan officers where not only is there value because it makes quoting rates and programs faster for you, it's a better customer experience, but I've also heard over and over, it's a better handoff to your team. Do you use the total cost analysis as part of the handoff to people on your team? Is it helping with teamwork at all?
Yeah, so I would argue that's without question the hardest part of this process is running the team, right? Because most of us that do what we do, they're really good salespeople, and then we don't do a great job typically handing things off. So for me to have a TCA that's built out, the last thing the client saw, right? The last piece that they saw from me, and I've got a walkthrough of it. My team can watch that report. They know they can pull it up, they can look at it, they can see what I was looking at, the numbers I was, and if I'm on vacation and I'm hanging out with Mickey Mouse back there and they can't get a hold of me, they know they can watch that TCA and they'll know exactly what my thoughts were, how I was structuring it, what we're doing, what the expected numbers are. And it not only is a better handoff, but it's a better mistake avoider, right? To use the right word. So they can look at that, and if they know that I was thinking that loan needed to be locked at, whatever it is, 3.5, and they're going in and they're getting pricing and it says it's close to 4%, their alarm bell goes off and they're like, something doesn't seem right here. What is it? And maybe it's that it wasn't marked as home ready or something, so the LLPAs weren't capped. So they know to call me. It's like, oh, that doesn't look right. I better get with Andy and figure something out. So it's a mistake avoider too, which is a better client experience.
I love that. A mistake avoider. I love that new word. I'm trying to
use my vocabulary. I told you it's top notch, right?
I'm right there with you. Always inventing words and new phrases. So any last words of wisdom to the mortgage coach community? I'll give you the final thoughts.
Guys, it's your responsibility to raise the bar on our industry. We're going to see out of the market that we're in now, and the market that we were in over the last year to 2 years, there's a huge separation that's being created around people that are really doing the job as an advisor and as a consultant, and those that are just in it for the transaction. I've been using Mortgage Coach in my market it says I've been a member since 2010, but I told you, Dave, I was a member from when it was like way back loan toolbox, right? I was wet behind the ears like 2002 trying to figure out how to do a loan. So I've used it for a long time. No one uses it. I've done a couple of these videos. Everybody's seen my reports. My clients send it to other competitors. Nobody uses it. Clients love it. Use it. It sells for you, so you don't have to. And we have a responsibility to raise the bar in our industry. That's it. And it's your responsibility. Make us better. Make our industry better. Use these reports. Take better care of people.
Well, I love that as a closing thought, guys. It is a competitive advantage, and you have it. So you took time to listen to this interview. I'd love to know what takeaways you got. If there was a phrase, a quote, your big takeaway, put that in comments down below. If you liked this interview, give Andy a like. Let him know you liked him. Love it. Share it with your team. Andy, dude, appreciate the leadership you bring to the mortgage coach community. And you know what? My son is going to play lacrosse for Syracuse next year, and he's going to be playing Virginia. So if we do a home game, I'll come hang out with you, bro.
Come on, baby. It'll be fun.
How far are you from the university?
I'm like maybe 15 minutes.
Sweet.
But I'm out in the mountains. I got some beautiful area. You come hang out. I'll show you the black bear. How about that?
Okay. The black bear. What's the black bear?
We have black bears.
Black bear. I gotcha. All right, dude. Well, hey, man. Hopefully you got value. Take care, everybody. Have a great day.
Thanks.
Later.